Welcome back to Entrepreneurial Edge. Let's get right to it. Where should your hard-earned money go? Stocks or real estate? For decades, people have debated this. Stocks offer ownership in world-class companies. Real estate gives you something tangible. Both have their appeal, but dreams alone won't fund your retirement. Smart decisions will. Many feel torn, hearing stories of fortunes made in both markets. Confusion leads to mistakes, or worse, inaction, which lets inflation eat away your savings. The choice isn't just about numbers, it's about your lifestyle, goals, and risk tolerance. Ask yourself, do you want to be a hands-on landlord or a silent partner in global businesses? Your answer shapes your financial future. To cut through the noise, let's look at what Warren Buffett, the Oracle of Omaha, has to say. Buffett built a multi-billion-dollar empire through discipline, patience, and a deep understanding of money. His wisdom can help you make the right call for your own life. So listen closely. What he says might just change how you build wealth. This is a lesson you can't afford to miss. Let's dive in. Warren Buffett's secret? He overwhelmingly prefers stocks. He invests in businesses, not buildings. Why? Because the stock market offers endless opportunities. Thousands of companies, countless industries, all at your fingertips. Great businesses can innovate, grow, and adapt. When you buy a stock, you own a share of that future. Buffett and his partner Charlie Munger agree. Real wealth comes from owning equity in great businesses. Another reason, liquidity. Stocks can be bought or sold in seconds, giving you flexibility and control. Need cash or spot a better opportunity? You can act instantly. Transaction costs are low, and the process is simple. Open a brokerage account, pay zero commissions, and you're in. Buffett loves simplicity. He prefers investments that don't require constant management or complex analysis. For him, owning a piece of a wonderful company is far easier than navigating real estate deals. Stocks offer a cleaner, more efficient way to grow your money. That's why Buffett bets on businesses. The potential for compounding wealth is simply greater in stocks. You're part owner of dynamic enterprises, not just a landlord. It's a strategy anyone can follow, and it's worked for Buffett for decades. Now, let's look at real estate's downsides. The biggest issue? Lack of diversification. Buy one property, and all your money is tied to one location and market. If the neighborhood declines or you get a bad tenant, your investment can quickly turn sour. Real estate transactions are slow and expensive. Agent fees, closing costs, legal fees, they add up fast. Selling is just as costly and time-consuming. Compare that to the low-cost, liquid world of stocks. Then there's the hassle. Being a landlord is a part-time job. Maintenance, repairs, tenant issues, and late-night emergencies. Buffett values his time and peace of mind. He'd rather own a piece of Coca-Cola than deal with a leaky roof. He's not totally against real estate. He's made selective, opportunistic purchases, like farmland after a price bubble. But for most people, he believes wealth is built through long-term ownership of productive businesses, not by speculating on property. Real estate can work, but it's rarely the easiest or most scalable path. For the average investor, stocks are simpler and less stressful. Focus on what grows your wealth efficiently. That's Buffett's approach, and it's one you can use too. So, should you avoid real estate entirely? Not necessarily. Enter real estate investment trusts, REITs. REITs let you invest in a portfolio of properties, shopping centers, offices, apartments, without owning them directly. Buffett has invested in REITs like store capital when he saw value and strong management. REITs solve many problems. They offer diversification, liquidity, and professional management. You can buy and sell REIT shares instantly, with low costs and no landlord headaches. Professional teams handle everything. You just collect dividends. REITs are a smart way for everyday investors to access real estate's benefits without the burdens. They fit neatly into a diversified portfolio. For Buffett, and for you, it's a hands-off, efficient way to own property. That's a financially smart move. So what's the takeaway from Buffett's approach? Prioritize quality, simplicity, and long-term growth. Buffett's strategy: own productive, well-run businesses, often through low-cost index funds. Be honest about investment costs. Real estate's hidden expenses and risks often outweigh its appeal. Don't let emotions cloud your judgment. Be disciplined. Your home is for living, not investing. If you want real estate exposure, consider REITs for diversification and ease. Build a diversified portfolio, keep costs low, and be patient. Let compounding in great businesses work for you. That's the surest path to financial freedom. Make your future a secure one.